This is our Forex blog for May 11th, 2012, and like we do most days, we want to buy the strong ones versus the weak and sell the weakest versus the strong. Everyone knows to trade with the trend, but what trend? We have the real-time trend on the top, which is made up of 5 of our best statistical tools. We can compare the dollar to every other currency and the same for each of the other ones. Underneath that, we show the 15-minute trend, hourly trend, daily, weekly, monthly. When they all line up, it's pretty much a no-brainer. Dollar, yen, for the most part, the dollar is stronger than the yen because a little bit of red right here. You want to trade that against the weaker one. Last night, the euro appears to be, and also the Swiss. So that means you're buying the dollar Swiss and you're selling the euro dollar. Let's take a look at that coming up to about 3 in the morning when the dollar starts to get a little bit of weakness right here. Before that, you're looking to sell the euro dollar. From last night, notice down, you wait for a pullback, you might have had a small loss right here, small win, small win. You know, the volatility is less now than it was in the past, but volatility is cyclical. You get high volatility followed by, lower volatility. And you can see this nice little pullback right here, falls, pullback right here. This is one of the reasons why I personally use range charts, because when you have super weak currencies, you can, take and oftentimes catch 20 and sometimes only 5 to 10 or 15 pip wins, but you are able to get into trades, whereas on a 5-minute chart that doesn't appear to be any clear areas to. Basically we're looking for pullbacks. The beginning of the downtrend right here, you have a 1, 2, 3, 4 bar up move, 4 bar pullback, followed by 1 bar down. You sell it when it goes 1 pip underneath that bar's low, and you always want to draw your fibs on the previous swing. It gives you a great place to get out with a profit. And you can see it just went 2 pips past the 1.32 fib target. We also have the previous day's low right here. Anytime it goes underneath the previous day's low and comes right back up, it's usually going to stop you out. You might as well either get out of half your trade here at 08 and the other half when it breaks back above into yesterday's range at 13. So your average exit might have been around 10. You're short this thing right here at 37. So you made 27 pips. And that's pretty much 3 days minimum net profit. If you net 10 pips a day, 50 a week, 200 a month, you double your account every 2 months. So, one nice trade like this is a half a day's or half a week's minimum profit goal. Even something simple as this, take 5 pips, short here, take 5 pips, short here, take 10 pips, you got 15 pips on a scalping basis if that's what you choose to do. Later in the session, we'll look at a lot of traders trade US session. Pound's extremely weak. Later in the day, the real-time trend, anytime you see at and above the 80 level in red, it's extremely weak. If you get, most currencies don't move one way forever. They go down and then up, down and then up. If you see the down wave having more momentum than the up wave, and the 15 and hourly trend is showing the vast majority of pound pairs are trending down and the daily switches down, it's pretty much a no-brainer, right? 730 right here, you're looking for sales in the pound. So what do you want to trade it against? Well, the yen and the dollar aren't that strong right then. It's possible the euro is, but the weekly monthly trend of this is down. So it's not the best scenario. And at that time, the New Zealand looks pretty strong. You might look for pound New Zealand sells. Let's bring that chart up. This is not one I typically leave running. 730, you're looking for a sell, and you can see by using the currency meter in the most logical way, you're selling the strong, weakest ones versus the strong. You have a nice 25 pip move here. If you short here, it falls 10, 15 pips. Short here, maybe you made 10 pips when it breaks through the low. You can see it fell 25, 50, 75 pips. And that's the real benefit of our currency meter. If you are in the ones most likely to trend, and you can see at 8:30, the CAD shifted up. It was the strongest one on all time frames. The pound CAD after 8:30 was a no-brainer sell. Pound's one of the weakest ones. Here's 8:30, and you really only got one little pullback right here. This is a 5-minute chart, by the way. So let's change this to, let's actually load a range chart on the pound CAD, and you'll see why when news events come out that cause these big, huge moves, it's very hard to enter them on a 5-minute chart. But on a range chart, piece of cake, because if it doesn't work, you don't lose as much as you would on a 5-minute. If you never know if the market's going to retrace all the way back up to the bar's high. So if you sold it all the way down here, you're risking 25, 35, 40 pips. Whereas if you have, let's just say, a 6 pips per bar range chart, I paused the recording for the range chart to load, and I made it fill up the entire space here. You can see, even on a 5R chart, the market started going down. If the market gaps, we actually show you where the next gap price is. So it gapped down very substantially. And then you have a nice little up move like this. So even on a range chart in this particular case, there wasn't super clear entries. You might have gone short right here, or even this first red bar right here with a very tight stop. This is really the only, in my opinion, safe way to trade news events. And you can see it fell another 30 pips or so here. Wait for a decent sized pullback. Anytime it falls down that much, I probably would have maybe sold it right here. It went sideways. I would have got out of this with a tiny loss, waited for it to break down or go up. And, the fact that it went up, came down, went up, and very low volatility compared to the previous volatility. Most explosions down like this continue at least one more wave, and you already know ahead of time where the first and second fib target is. Let's draw the fibs on here. Having weird problems with my mouse. So notice it went right to the fib target. So by shorting here, this is really the key behind trading. And during high volatility times, it's wonderful. My mouse is having some kind of weird issue today with its expanding. All right. You're basically risking that. That's not, you're actually risking less than that, but for illustrative purposes, this will only make my argument even more conservative. You're risking this much, and this is your likely profit target. In this case, it did go to the profit target. So you basically are risking 15 to 20 pips, and you have a very good chance of making 50 plus pips. Anytime your projected profit target is at least 2 times bigger than what your risk is, in this case, it's about 4 to 5 times bigger potential than what your risk, you got to pull the trigger. And if you want to scalp this, you're in, you're out, you get in, follow red bars down, first green bar, you're out, another red bar, you're in, you're out with a small profit short, and then you trade each little swing down there, that's fine too. But you can see using the currency meter really, really helps you find when you know the pound's extremely weak and the CAD becomes strong on all time frames. From weak to strong on all time frames, that almost never happens. It only happens during news, and those kind of events, let you know that you can trade that currency. In this case, found a nice 50 to 65 pip profit.